Welcome back, ladies and gentlemen. And today we're going to break down the strategy and the model that I use, as you can see right over here, to make $3,000 in one trade. As you can see, it's $1,000 across three accounts. All right. So this was a trade that I took, a 1 to 2 RR. Risking $500 on each account to make $1,000. So this was a trade, as you can see, like the executions and everything. So you see, I'm not like bullshitting around. And those were my funded accounts, still my funded accounts. And let me pretty much break down. I already made a video about this strategy. You can go back and take a look at it. It's called Copy My Strategy. Yeah, it's pretty much right over there. Has over 75% win rate, usually even 80% win rate, depending on how selective you are with the setups. But yeah, so let me pretty much break it down. So today, obviously, we're at Saturday, January 3rd of January. So we're already 2026. But this was a trade that I took on December 29th, Monday, pretty much the beginning of the week. And it was the only trade I took throughout the whole week, pretty much. So that was the only clean setup that I saw. And yeah, I just wanted to quickly break it down and explain how my strategy works and how you can copy it because it's so simple and so profitable. So let's get into it. So the main component of my strategy is a high time frame for value gap, right? I don't care about breaker blocks. I don't care about order blocks. I don't care about none of that shit. All I care about is high time frame for value gaps. And of course, you have to put it in context with where price is at. So for example, if we look at this entire range, you can see that this 1 hour for value gap, this hourly for value gap sits at equilibrium of the range, right? So sits like at OT of the range. And this is a perfect area to look for shorts from, right? So right now, it's like the candle of 9 a.m. And yeah, pretty much as you can see, there's no other. So we did reject, like react and reject from this hourly over here. But in my eyes, I still, because we have to take the, like we have to balance, we have to rebalance price back to equilibrium. And we have to pretty much, let me see the 4 hour candle. No, yeah. So the 4 hour candle, we did not have any for value gaps. Besides this hourly one. So we had this hourly for value gap. Right now, let me fast forward to 9:30 a.m. market open. One more candle. There you go. All right. So market opens right over here. We manipulate lower and we start going higher, which is perfect. And what else do I see? All right. So let me take a look right over here. All right. As you can see, we have some liquidity over here. So we have buy side liquidity over here, which is pretty much what I love about this buy side. Okay. Always try and look for accumulation spots. All right. When you see all of this accumulation over here, this is a very good liquidity area to target, or at least not to target, but at least to expect price to come back over there. All right. Why? Because imagine how many people and how much money is trapped inside here waiting. So people are longing, people are shorting, buy stops, sell stops all over this range. And pretty much I'm looking for the buy side to get swept. And then we want to see a tap inside that hourly fair value gap. All right. So fast forward, market open immediately. All right. 9:40 a.m. we sweep the buy side and we tap this hourly gap. So I'm like, oh shit, let's go. Perfect. This trade was, by the way, live recorded and uploaded to my YouTube, so you can see my live thought process and my live analysis, live execution and reactions and trade management all live in that video. So you can go check it out. I'll put the link in the description and maybe you'll see something pop out. All right. So step number 2, after we got the high time frame for value gap hit, okay, I am looking for displacement from that gap in order to confirm my bias. A lot of people go wrong where they start looking for entries straight after we got the tap. Now, this is fine, right? There are many models that will work. All right. You could have found an entry here. Me personally, I trade inversions. I trade IFVGs. So for me, there's nothing over here. You cannot take this 1 minute inversion. At least I don't take it. But what I do, okay, I want to see the market confirm the change of order flow. All right. I want to get in after the market has already confirmed that we're rejecting from that area and going lower, right? Because you can get caught up and manipulated in like these tiny 1 minute inversions, okay? You will get caught in them and get manipulated, get stopped out, and then potentially price will even reverse towards your take profit. But you'll get stopped out most of the times, okay? Very likely that you'll get stopped out. Why? Because you're not waiting for confirmation. You're smacking like inversions immediately off the tap. What I do is I wait for a 5 minute fair value gap to open up in the direction of my trade. Now, as you can see, we immediately get a very strong rejection and then a 5 minute bearish fair value gap open up right over here. So we swept liquidity of this accumulation zone, right? We tapped this high time frame fair value gap and out 1 hour bearish fair value gap, and now we got displacement lower, okay? Which in my eyes confirms to me, hey, we are going lower. We are going to take the sell side right down here. All right. So we're going from buy side to sell side. This is what the market does. Not only that, all right, if you take a look from the high of this range to the low of this range, you see that we rebalanced equilibrium, right? We tapped the 50% of the range, and now we're rejecting and creating displacement lower. And not only that, we had an SMT with ES. So pretty much Nasdaq did take the did enter the hourly fair value gap, and ES did not. So pretty much after we got this 5 minute fair value gap, all I'm looking for is a retracement back into that fair value gap, and then from there I'm taking inversions lower. For short, pretty much. I don't care about this 5 minute. I don't care about this 5 minute. I don't care about those. All right. All I care about is a retracement towards that 5 minute. And pretty much, so you see right now we're 9:54. All right. We open 9:55 a.m. We opened that gap, but then we start going lower and lower and lower. And in my mind, I was like, fuck, it's running away, as it was running away all the way over here. But very, very important. All right. As you can see, the sell side right over here, these are perfect equal lows. All right. Perfect equal lows right over here. And we still have not taken them. So, in my eyes, as long as we have not swept that sell side and we have not hit any opposing fair value gaps, so we are still stuck in the same range. We still have not swept any significant sell side liquidity, and we still have not hit any high time frame bullish fair value gap. So in my eyes, we're still valid. Shorts are still valid. All right. So I was waiting for a trade to show up. Now we even had this bearish 5 minute over here, which we ended up disrespecting and inversing to the upside. But I couldn't care less. Why? Because obviously I wanted to try, of course, if I got an entry from that 5 minute and we got like a rejection and we went lower, I would have taken that. But it's so much higher probability if you again take trades in premium of the range. You want to short in premium and buy longs in discount. So we have this leg, right? We wait for our retracement all the way back up, and we get the tap inside this 5 minute fair value gap right over here. Equilibrium of the range, OTE. We pretty much perfectly rebalance this price leg and hit that 5 minute fair value gap. And then as of that leg, the highest time frame inversion was this one. So after we hit the high time frame fair value gap, got the displacement, 5 minute fair value gap opened up, we got the retracement lower. Now, what I'm looking for is the highest time frame fair value gap in that leg, so we can inverse that, all right, and take shorts. All right, so that was my play pretty much like this. And then price held up the fair value gap in this one, held up in this one, and then inversed in the third one. Yep. So I took the entry right over here. We have this IFVG now, and I took it right over here. Stop was above the high. All right. And I was targeting a 1 to 2 risk to reward, and pretty much price hang around, like price kind of edged my entry level. All right. We even went into some drawdown, as you can see right over here. We went over here. But then eventually we started dropping lower. And this is where I moved my stop loss to break even. So that was a 1-to-1 risk to reward. This right over here was a 5-minute bullish fair value gap. So as you can see, like right over here. So you see this was a 5-minute bullish fair value gap. This is a very, very good area to move your stop loss to break even, because usually a 5-minute fair value gap creates some sort of rejection. So you got to be aware of that. But obviously, if your draw on liquidity is strong, your trade is strong, then obviously it should not reject back to your entry point or stop loss. And then pretty much smooth, like a smooth sailing, pretty much $1,000 in, let's say I entered the trade 10:37 and then I exited in 10:50. So that was around like 12 minutes, 12 and a half minutes of a trade. This is, by the way, absolutely fucking insane. Cold espresso, you gotta try it. Anyways, so that was a trade, $1,000 across each account. And as you can see, we even went lower, but we're still, again, have not swept the sell side until like much lower of the day. I don't even remember. Like we pretty much consolidated for like a few hours. And then yeah, so let me go back to that trade. Monday. Yeah, there you go. That was a trade. Like, so we ended up consolidating for like hours until 12:30 a.m. where we finally swept the sell side. And I couldn't care less. You know, I wanted to take my piece of the pie. I took pretty much 50 points, man. So this is a very good trade. Beautiful trade. Eventually sweeping out this lows. Obviously that was a 1-to-4 almost, but 1 to 3.8, but I couldn't care less. You know, you take your piece of the pie and you're done for the day. So this is the strategy. This is the trade. As you can see right over here, banger of a trade, perfect, amazing trade. And yeah, this is the simple strategy. Honestly, bro, that's all you fucking need in 2026. Like, stick to one model, one strategy. All right. This is such a simple model that everyone, like, it's so easy to follow the rules here because you know exactly what you're waiting for. You don't need to be, discretionary all the time and look at 1,000 different things. You have a very simple structure. Okay, a very simple model and rules you can follow. So it's so much easier for you to actually be disciplined. All right. So, in my eyes, if you are a struggling trader, unprofitable, and you actually want to make that jump in 2026, bro, stick to this model, right? You can copy this and just follow this model, bro, and you'll become profitable. I promise you that. As long as you follow the rules, though, because if you don't follow the rules, then it doesn't matter what model you're using. All right. It's all about the trader. It's not about the model. But you follow that strategy, copy these rules, bro, and you'll make money in 2026. It's guaranteed, all right? Just if you follow the rules, of course. And yeah, that's pretty much it. So thank you for watching. I hope you guys learned from this trade recap. And yeah, I hope to see you in the next video, all right? So let's have a successful 2026. Peace out, boys.